The average net worth of a family who owns their home is over $250,000. The average net worth of a family who rents is $4,000. When I heard this statistic in college, it blew my mind, and I knew homeownership was one of the easiest ways to gain wealth and success. So in this video, I'm gonna break down the top loan programs for 2026. So if any of these programs pique your interest and you're trying to figure out your budget, click the link below and we could schedule a call. Number one, conventional loan. So conventional loans offer the absolute best interest rate when you're ready to buy a house. So if you have decent credit, 700 and above, and demonstrable income, so if you're a salaried employee or if you have a business that shows solid income on your tax returns, you always want to go conventional. The minimum down payment is only 5%. Most of my clients put 10 to 20%, but you can do as little as 5%. And a new rule that changed the game is you can do 5% down on up to a 4-unit property. So you can buy a 4-unit property, you can live in 1 unit, you can rent out the other 3 units, and you only need to put 5% down. This is a game changer. The second most popular loan program is FHA. So the costs and fees with FHA are higher. So I want to say that up front. You're going to pay a high monthly mortgage payment, and you're going to pay an upfront mortgage payment that gets rolled into your loan when you buy a home. But FHA is designed for people that have credit difficulties. So if you have a lower credit score, 680 or lower, and you have a low down payment, 3.5%, you want to go with FHA to get yourself into the home. We always want to encourage that you work on your credit because you don't want to stay in an FHA loan forever, because like I said, you have a very high monthly mortgage premium that you're paying, and you want to work on your credit and get out of that FHA loan as soon as possible. Also with FHA, you have down payment assistance programs where you can get 100% financing to buy a house. Number 3, VA loans. So if you're a veteran, this is a huge benefit. So the 2 biggest benefits of getting a VA loan is number 1, no down payment. You can get 100% financing on your home. And number 2, you have lower interest rates than even conventional loans. So even if you put nothing down, you're gonna get a very low rate, lower than conventional loans, and you have no monthly mortgage insurance. So with other loan programs like conventional and FHA, you have some kind of monthly mortgage insurance. With VA, with the low rate, nothing down, no mortgage insurance. So if you're curious about any of these programs and want to run the numbers and see what your budget is, click the link below and you can schedule a call. Number 4, bank statement loan. I've been doing a ton of these loans over the last few years. They're designed for business owners. So if you're any kind of self-employed borrower, so let's say you're 1099, you own a coffee shop, you're a real estate agent, you're an insurance agent, any kind of business where you are self-employed, you could be a consultant, you could be a coach. This program is designed for you. They don't look at your tax returns whatsoever. What they'll do is they'll look at your last 12 months of business or personal bank statements and see how much you're depositing, take the average of the last 12 months, and that is your income. It's the perfect program for savvy business owners and entrepreneurs who have a lot of write-offs on their tax returns because they don't want to pay taxes, which is one of the biggest benefits of being a business owner, but it doesn't disqualify you from buying a home. Number 5, DSCR. It's a fancy term. It stands for debt service coverage ratio. This loan program is designed for investors. So if you have a lot of cash and you can put 20 to 25% as a down payment, you can use that program to buy investment properties. The bank will check to see what kind of rent that property will produce. If the rent covers the mortgage payment with 20 to 25% down, you got yourself a house. Number 6, asset utilization loan. I've been doing more of these recently as well, and the asset utilization loan is designed for people who have a large amount of cash but don't necessarily have any income. So you don't have to have a job, you don't have to have a business, you can buy a home as your primary residence to live in, and what the bank will do is they will take whatever cash you have in the bank, divide that by 60 months, that's your income. And that money can be in a checking account, savings, brokerage, retirement, really anything. So let's just do some quick math here. Let's say you have $500,000 in stocks. All you do is take that number divided by 60, which gives you $8,333. That's your income. Very simple loan, great for people, again, who have a large retirement, savings, stocks, or anything like that. Your assets are your income. You don't need a job. Number 7, fix and flip loans. So let's say you're an investor and you want to buy a rundown property, add value to it, renovate it, add square footage, and then turn around and sell it or rent it out. A fix and flip loan is for you. So let's just say, for an example, you find a rundown property for $300,000. You do have to put 20% down, which is $60,000, but the bank will give you $100,000. I'm just throwing out a number there. Could be less, could be more, but the bank will give you money for the renovation. So if that home needs $100,000 in renovations, they'll give you the $100,000. You use that money to renovate the property. Then after you're done renovating, you can either sell the property or you can refinance into a traditional 30-year mortgage. That program is perfect for investors who want to flip properties and you don't want to use all cash or use all of the money that you have. The bank will actually give you the money to do those renovations. And last but not least, number 8, construction loans. So let's say you want to buy a piece of land and you want to build a house. The bank will actually give you half the money to buy the land and they'll fund 100% of the construction of your new home. So if you've dreamed of getting a really special plot of land in Sedona, Arizona, and you want to build your dream home, this is the perfect program for you. You do still have to come in with a little bit of money. You'll have to pay for half of the land acquisition, but the bank will fund the rest. So you can build your dream home all in one loan. The land and the construction all included. So if you're curious about any of these loan programs and want to run the numbers, see what you qualify for, schedule a time below, and I'd love to chat with you.